Is the sky falling?
If I could do a Chicken Little, I would.
Like falling to the real estate sky. The real estate sky falling.
What does Chicken Little even sound like? Something like that. So where is the real estate market going? Is it falling or is it crashing? Is this the end of the world?
Where is it crashing?
Or is it just a correction?
Is it just a little correction? Hey guys, I'm Alyse.
And I'm John.
We're at the Heart of Austin Homes team based in Austin at Keller Williams.
We've got so many charts and graphs in front of us. I mean, it makes me kind of happy because I'm a data nerd.
So many stats.
But this is almost like overwhelming. So
Exactly.
we're going to break it down to make it simple and so that it's not that overwhelming and give you the high points of what this crazy market means for you as a buyer or a seller right now.
We have 7 main points.
Oh my gosh, that many?
That sounds like a lot. I promise we're going to try and make it as fun as possible.
Okay, let's go.
Point number 1. The economy nationally, it's a bit of a mixed bag right now. Obviously, you've heard inflation is up.
Yeah.
And if you look at it from month to month, it's up about 1%. If you look at it year over year, according to the stats I was looking at, July to July, it's up 6.8%.
Yeah, that's high.
And if you look at it month over month, personal income is up 0.6,
Yeah.
and I hate to see that be lower than inflation.
Yeah, so that means that incomes are not keeping up. So people are actually losing purchasing power.
Relative to spending, however, spending was up 1.1%, so just a little bit higher than inflation.
Because America.
So
We
why
love to
not?
spend.
Why not spend it?
But still, the numbers are pretty close, so it's not that bad. And the good news is that spending is still up and consumer spending is, what makes the world go round.
Yeah. And another great point is that jobless claims, both continuing jobless claims and new jobless claims, are actually down. And that's fantastic. The unemployment rate is down to 3.5%, which is kind of that bottom that we keep bouncing off of in the last, 10 or 15 years. So that's a good sign.
Yeah, because at the end of the day, it's all about jobs, right? Because jobs and spending, that's what allows people to buy houses.
If you want to work, we want to be able to have a job for you, right? Yep. Then if you look at it from the standpoint of just real estate, we have the fact that the Fed just did that 3/4 point crazy bump,
Yep.
but mortgage rates actually went down in response to it. Like they were like, hey, you got this Fed, this inflation thing, so we're not gonna worry about it anymore.
At least that's our theory.
Yeah, and the Fed has talked about as early as next year, softening rates and lowering them back down. So that might be helpful.
Yeah, turn the printer back on. Like we're sick of this recession. Let's print. Well, we'll see though. That's a year off at best. Only if the Fed can claim victory and say that inflation has been beat.
And another massive real estate leading indicator is mortgage applications.
Yep.
And those are down significantly in the last few months, which just totally lines up with what we're seeing.
Yeah,
in
that's
the
going to come out in
Austin
some of the other stuff we're going to share. And so applications mean who's shopping for a house.
Yep. Number 2, what does that mean for the Austin market? Inventory is up substantially. If you look at how much inventory we had 7 to 12 months ago, we had 1 week, which means if everything that was available on the market continued to sell at the same rate, it would take 1 week for it to sell out.
We had like 250 active listings in all of Austin at one point.
That was
right?
just bizarre.
It was just weird.
So bizarre.
Yep.
And then jumped to 4 to 6 months ago, that was up to 2 weeks. Oh my gosh. Just for some context, historically in the United States, anything under 3 months of inventory is considered a lightning fast market, right? Now, guess what we're at? We're hovering just below or just over 3 months of inventory, depending on what part of Austin you're talking about.
Yeah, in numbers terms.
We're now up to what's considered a regular fast market.
Yeah, that's 3,018-ish houses for sale in all of Austin. They're just single family homes that are for sale. So certainly much higher than 250, but it's also not 6 months of inventory either.
For sure. Point number 3.
inventory is still historically low if you zoom out. So if you look at like the last 10 years, or say even the 8 years before the pandemic, because that was just crazy time, the average number of listings in a July during those years was, 4,260. And last month, we were at 3,467. So considering that the city is getting bigger and we've actually got more homes in the city, we still have fewer homes for sale than historically, at least over a 10-year time frame.
Yeah, so the sky's not necessarily completely falling.
It's just changing really fast. And
Which
so
can be scary.
When things change quick, then people go like, oh, what is going on? Because it's, it's like the fast boil versus the slow boil.
Yeah, definitely. Point number 4 is that what is causing this? Obviously, it's a whole plethora of things, but just breaking it down to the stats, new listings are holding pretty steady at a little over 1958 last year in July versus 1930 this July. Yep. That's holding pretty steady. What isn't holding steady is the 40% drop in actual sales. Yep. So there are just less buyers coming to the table. Again, relating back to that stat we talked about earlier, where new mortgage applications were down drastically. Last July, we had 1,569 sales. This July, we had 939. That's a 40% drop. So,
yeah, people are still selling at the same rate. It's not like everyone's going, really, wow, I want to sell my house now. And more people have that mindset. Like, no, that's staying about the same. It's just buyers are drying up. Okay, point number 5 is new construction. So where does that play into all of this? Well, if you look at all of the homes that are active today, literally 1 in 8 of them is a new build. So that's actually pretty high. There's also been a lot of new construction that's been coming online over the past 2 years because, hey, all the prices were going up and builders were going like, this looks great. Let me start building because these numbers just keep going higher and higher. So they bought a bunch of land and they've been building it. And guess what? They're finally getting those projects done. But they're getting done at a time when the buyers are shying away. So now the inventory is piling up and they're not going to be able to get the prices that they want. So as a builder myself, I'm looking at the prices of land, I'm looking at the price to build, and I'm looking at where the sales price is. And right now it looks almost like a break-even deal for a lot of builds. And if prices are going to be coming down in the future here, which I think they will simply because we've just got more supply, then builders are going to stop for a while because they're not going to build anything if they can't make a profit. And so this is also just the whipsaw effect going on. We saw a ton of building and all those constraints, and that caused this, big imbalance in the market. And so now we're going to see all that supply show up, and then we're going to see a big imbalance in the other direction. So once all that inventory sells through, builders will stop building until prices come down, and then they will start building, which will create yet another bubble in the supply chain. So if I had to make a prediction, I'd say in about a year, we're going to see another tightening in building supply.
Number 6. So what's really interesting about that is that home prices aren't really dropping. They're not dropping drastically at all. In fact, they're still appreciating slightly, right?
Yeah, so the appreciation is shrinking, right? Which means the prices are still going up. They're just not going up as fast.
And if you look at year over year appreciation, that's going down every month. Like we're getting closer to, because remember, a healthy normal market has something like 2 to 4, maybe 5% appreciation a year. And we've been seeing crazy numbers between like 18 and 40%.
Yeah.
And that's just not a sustainable thing. So year over year in June, it dropped to 8.63%.
Yeah, and that means since last June. So.
And in July, it's up to 12.7%. So, I mean, that's something to consider. But think about it this way. 12% used to sound like a crazy year.
Yeah.
So, yay.
Welcome to the new normal.
Yeah, exactly. It is healthy that it's regulating somewhat, even if it's a little bit of a, whiplash.
A little bit of a head fake, yeah. Okay, the last and final point, number 7, is what is selling. So even though we have all this extra inventory, and even though prices are still not dropping yet, although I think that at some point that will come if this inventory sticks around a lot, the properties that are selling are the ones that are priced correctly. So if you look at the average days on market for stuff that is selling in this market, it's still really low. It's like 10 days.
Yeah.
So if you put something on the market.
Oh, things haven't changed much, right?
And it goes under contract and it closes and it sells, like it takes 10 days from list to contract, which is still like lightning fast.
Exactly.
Now, the fun part are the part that's
interesting.
The interesting part. I only say fun because to me it reveals something, right? Which is that the listings that are active, all 3,000 of them, if you look at the average days on market for those listings that are not selling, it is 43 days. Right?
Notice the difference between 10 and 43.
So if it's not priced right, or if it's priced too high, or if it's priced expecting the market to continue to go up, it's sitting around for a long time. So the buyers that are showing up, because remember, the supply is about the same number of people are putting their house for sale as they were last year. It's just that buyers are a lot pickier and there are fewer of them. So of course they're buying the best picks. And when they find something that they like, boom, it's gone fast. And so if it doesn't look great, if you're not at the tip of that market, then it's sitting for a long, long time.
Well, and actually the stat is that the median days on market of things that are selling is around 10. The average is 17.
Yep.
And then the average days on market of things that have not sold yet is at 47. But man, that's a month of difference.
Yeah, it's huge.
It's huge. So really big takeaway there is that if you're gonna list now, which there's a lot of things hitting the market right now, that you need to be priced intelligently.
Yeah.
And
Otherwise,
you need to be in good shape. For a while there, you didn't have to work as hard at it.
It's true.
And our job was, how do we get the bidding war to go as crazy as possible to get you the best deal? And now it really is, how do we actually genuinely get your house to be one of the ones that is selling?
Yep, that's right.
So, for those who have made it through to the end, here is
we love you.
Quick.
Thank you for making it this far.
Here's the quick summary of the 7 points we went over. Right now, number 1, the economy is a bit of a mixed bag.
But overall good.
But number 2, inventory is definitely up in Austin.
Yep.
Number 3, it's actually still historically low inventory in Austin, which is kind of bizarre that it's up so much and still historically low.
It just doesn't feel that way.
Number 4, it's really coming from the fact that sales are down. New listings are holding fairly steady.
Yep.
Number 5, 1 in 8 new homes on the market right now is a new home.
Yep.
So new homes went crazy, and now a lot of them are sitting.
Yep.
Number 6 is that home prices haven't really dropped off very much yet. And that's a pretty key one. And finally, number 7, the ones that are selling are still selling pretty quickly and everything else is sitting. And so you want to definitely hit the market in the best shape possible with a really smart price.
Thanks so much for watching all the way to the end. If you made it this far, you must be a numbers person because that was a giant steaming pile of stats.
So many stats.
And if there's anything that we can do to help you out or figure out where your property is amongst all of this chaos, please feel free to reach out to us. We would love to help.
Definitely. 100%. We're always there to get you very particular stats, as well as give you the high level summary of all of it to be able to help you make good decisions given the market. And then additionally, if you're looking to buy, it's definitely going to be the best time in several years to do so. Would love to help you figure out what you're going with there. And otherwise, thank you guys so much for watching.
We'll see you next time.